Good morning. Today is November 10th. It is around 10:16 a.m. So this week has been a very good week for the markets. Last week was one of the best weeks as well. If we look at the charts, we'll see that in the past I talked about creating a higher high than the time before. So this trend was moving downwards when you look at these highs. However, this past week we broke above this last high, and it seems like there's a fight going on to stay above this level. Also, when we look at the 20-day moving average and the 50-day moving average, I always like it when 20-day moving average is crossing the 50-day moving average. So if we look at it historically, the last time that truly happened was right here. Okay. However, the situation was that we had a significant decline, so there was a ways to go to get back up to the top, but we are really not that far from the top right now. So there isn't there isn't very far to go unless there's a major change. A major change being maybe rates get cut, but that is unlikely. The likely situation is that there I can't even say recession, but there will be pullbacks. There will be more people getting laid off. There will be a higher unemployment, just because companies, especially the public ones, are going to want to continue to increase their earnings, and one of the fastest ways to do that is by unfortunately cutting personnel. So this is kind of where the market is at. So where does this leave me in terms of the moves that I'm going to make? So looking at my spreadsheet, now I am roughly about 81% exposed, using only 27% of my account in equities. The rest is just sitting in cash. This is a good percentage because this is kind of rather than the 60/40 that you might hear people talking about. What I've basically done is I've created a 81/73. And I know that doesn't really make much sense, but that's because of using these triple leveraged equity TQQQ. I'm able to accomplish something like that. I'm able to put on more exposure without using much of my account. And it's similar to what would happen if you bought a house. You don't pay 100% cash. You might put a down payment, and then the house is what, 5 times the value of your down payment. It's kind of the same thing. All right. So it leaves me at 81%. I don't want to get TQQ above 30%, so I have maybe $100 left to put in there. UPRO, there's some more to put in there as well. But looking at this chart, I think I'm just gonna hold off. I'm not gonna do anything maybe for another week or two. Right. If we look at this performance chart in my account, the last 3 months, you see Nasdaq 100 is coming back up fairly fast. S&P is lagging a little bit, and my account is still above that. So cumulatively for the last 3 months, I'm at 2.15%, whereas Nasdaq 100 is 1.4%. If the Nasdaq does start to outperform my account over this 3 month view, I probably will add one more position, just so that because I'm still only at 81%. I can safely go up to 100% without underperforming. Once it goes over 100%, then it will overperform on the way up, but then it will also underperform on the way down. And I don't feel like I'm in a position where I want to do that just yet. So basically, if NASDAQ 100 starts to outperform my account, then I'll add one more just to give it a little bit more exposure. Right. So that is all I have for today. Have a great weekend.